Friday, May 30th, last day of May. Market analysis. Stan Ehrlich, good morning. Well, I'm starting to get the break that I was talking about for the last several days. So where are we? Well, we're trading on the stock indexes, which I start with first, and I go to futures and then a few stocks. Currently below yesterday's lows, I think, on all of the indexes. And that means we are probably more than just yesterday. So let's take a close look. This is a new low for the previous 3 days in the E-mini. After yesterday, the market made a new high for the whole trend up, which was after, of course, my fantastic buy signal on April 9th. All automated, people. This is the ER signals trading system, 100% automated. Stops, entries, exits, go back to bed. So we have come down to the first support level, almost to the one that's the yellow area, which is the better support zone instead of a level, one number or close to one number. So we're coming close to probably a minor bounce in the support, but this is so fresh and the topping out process, I'm not so sure that's going to hold at all. So I am definitely looking for a test of 57, 57, I think I've been saying. That's good enough. And then a little lower to close a small gap back from May 9 to May 12 over the weekend. So I do think that's about to get closed, maybe in the next couple of days, maybe sooner. Then we're going to be coming down, in my opinion, to 55.95, 55.50, call it 56 to 55.50 zone, support area, and a fairly profound one at that. I'm not ruling out moves all the way down lower than that, but let's just get there to begin with, and then we'll, on the way down, talk about further potentials. But right now, I do think this is the first decent down day we've got since the new high for the trend, and a bad close, relatively speaking. I would have loved to have had a lower close yesterday. I didn't get it. That would have produced a red, bearish, engulfing ER sell signal at the top of the whole move. The only thing there's two things I'm missing: the bearish engulfing and the overbought. But I keep warning you, when a market makes new highs or lows, it should usually, likely, close a new above previous highs, new high ground, or below previous lows, new low ground on the close. Next chart. E-mini. 1 minute just shows you the break and making a new low below yesterday and the day before. I'm actually going to change all of these 1 minute charts. Takes just a few seconds to a 5 minute chart to give you a different, little bit longer term perspective. And around now is when the chart should update. Very good. So other charts, and there are 5 other 5 minute, what are now 5 minute charts in the background. Good news, good news. So this is new lows for 1, 2, 3 days. That's the low that's super important on the 23rd. Next. Spider, same story, not much change. Next, 1 minute, now 5 minute chart on the spider. Obviously, the major or significant, I should say, downside breakout, 57.50, 6.60 and below, should start more of a decline and maybe even a little faster. Next, QQQ, higher high, bad close, relatively speaking. Down sharply today. The low today in the QQQ is almost exactly closing the gap. Now, I'm not surprised it's bouncing off the low so far a little bit, but I don't think that's going to hold. I think after this bounce is over, and we're still down 5 or 6 points right now, maybe it'll get back up to 5 lower, 4 lower, 3 lower, but not much of a bounce. We're going to break the low of the day. I think we're going to break the low of the day, close below today's low so far. I think, my opinion, obviously past performance is not indicative of future results, and hypothetical returns has some inherent limitations. Standard NFA CFTC disclaimer. And you should have known that to begin with, except maybe some of you neophytes, beginners. Watch out. These markets are very tricky. Next, QQQ 5-minute chart, starting to drop. Love it, like it, forecasted it. It's coming along. And it's just the beginning, I hope, I think, in my opinion. Next, NASDAQ. Got overbought yesterday for the first time again in a couple of weeks. New highs, but a lousy close, relatively speaking, to the other highs. You break resistance on the way up and you close back below that level, not a good sign. So that's why we're down a chunk already this morning. We're only at the half mark for the day. There's plenty of time left. Staying close to the low of the day at the moment. Not much of a bounce. Again, it's the low on May 30th that is critical here. Closing below that low, and I think it's going to happen pretty soon. Very quickly. I don't think necessarily today, although I wouldn't put it past these markets. Maybe Monday, Tuesday. Next, YM. Not quite below yesterday's low. Hanging in there okay, but it's going to happen, in my opinion, on the next wave down. And couldn't even make a new high for the trend like the others did. So it's not going down quite as fast at the moment, a little slower. But resistance is stopping the rallies. Overbought conditions stop the rallies. And I do think we're heading down into the next support levels. Next, YM, minor new low for the session, needs to get below yesterday's low. Then, of course, the low on May 23rd. Next, Russell, pretty much the same damn story. This is a little bit closer to a double top, right at a resistance level, the top of the yellow zone, resistance zone. And resistance and support are simply calculated because the market has had a lot of trouble getting above or below that price range, or, well, yeah, that price singular or price range, both come up with the support and resistance zones or levels. So next is the Russell 5-minute chart. Already breaking down pretty good. Let's go back to the daily real quick. You're already 1, 2, 3 days new lows. Okay, so that's 1, 2, 3 days. And it was very early in the morning on the 25th that it was lower. So almost all of the 25th were lower than. So I could say almost 4 days. Not quite. Next, bonds. Hey, it's working again. Bullish engulfing. ER buy signal yesterday. Love it. Whoops. Wrong keys. There we go. Outside update, bullish engulfing. Overbought within the allotted number of past days. I do not have to have overbought, oversold on the day that a bullish or bearish engulfing occurs. It could have been a few days earlier. I don't want to divulge too many secrets about my ER signals trading system. You want to know more, you know how to get it. Contact me. Pretty simple. So new highs, not by much. It's not up by much. But watch this. I think it's going to pop up even more. Not necessarily today, but I wouldn't put it past it. But next week, I think we'll be up probably at least above 213.24, 113.24. Not 213. 113.24. Easily. And probably coming close to or attacking 15.5. Next, notes. Same thing, except notes didn't get oversold in the last allotted number of days. Therefore, the two other bullish engulfings, one on May 27th and the other one yesterday, don't turn green because it was lacking the oversold condition. The bullish engulfing is true, and it's kicking in a nice rally, which obviously I'm expecting a test of 1102 maybe today, but probably also to 11.17, and I'm not ruling out within the next week or two 112.21. Next, energies. Minor new low. Yesterday, a bearish engulfing. You know how I rely on these bearish and bullish engulfings, and I've done this for decades. Decades. I've been at this since 1971. So I like what I see. It's working. The only problem is it didn't get overbought. Therefore, I don't have a red sell signal like we had back here last October with overbought and a bearish engulfing. We got overbought, but there was not a bearish engulfing at the top. We got overbought, and we did have a bearish engulfing for a little while on April 2nd, but it closed higher. During the day, it was a legitimate signal, but the rally during the day canceled out the signal by the close. So we had an outside up day, which I have nicknamed a bass-backwards reversal because it looks like it's bullish on the surface. But if you correlate that with overbought and oversold conditions, then it becomes exactly the opposite kind of situation, which was a whopper of a sell signal. But I don't have any computerized rules to take advantage of that, maybe someday. I'm bearish. I'm looking for lower lows. I'm looking for a test of the bottoms here. Something at least below 56. Okay, below 57. Next, we're at the neckline for the second day in a row in natural gas. Closing below today's low, which would be also below yesterday's low. They're almost the same. They're both on the line. Would cause a breakout. And I'm expecting it to also close below the other line, which is actually my favorite, and that's around 3.36. So closing below, let's say 3.36. We're going to drop like a rock, supposedly. Heavy volume, large range. Get down to at least the support level, 3.11, maybe even lower, and start our journey down to 1.4. Next, heating oil. New low closed yesterday, and a very nice follow through so far this morning. Getting close to oversold. So this is probably going to bottom out somewhere between here and the significant support area. And I probably should draw in one or two other support levels, but not at the moment. So I'm looking for lower levels, at least 1.93 and lower. Okay. Gold, silver, platinum, copper, then grain, then meat, and then some stocks. By the way, I'm interested in knowing your opinion. Should I drop cattle and hogs? It seems like there's a lack of interest in those two markets. It happens. I started trading when they were trading eggs on the Chicago Merc in 71. Milo, a grain on the Mercantile Exchange. Yep. Early 70s. And like pork bellies, which lasted longer, but they're not around anymore. They come and they go. So what have we got in gold? Down some, doji. That bear trend line is really acting pretty damn good. Now, I've changed contract months, so I have to make an adjustment on my trend lines here. All of these things need to be reestablished. And I'm just going to establish the ones that count right now. These need to be raised up also, so they're irrelevant at the moment. But there we go. Okay, so looking for support to be tested, 32.29. Looking for maybe this bear support line, bear trend support line. Now I say it that way because the trend of the line is bearish down, but we're currently trading above the line. So it's the bottom of a downward slanting channel, sort of, not the greatest example. And that provides support until finally proven wrong or right or whatever. So, looking for lower levels. Next, silver. Same story. Significant resistance to stop the rallies. They didn't get overbought. You don't necessarily, it's better if you get overbought at resistance. But I'm looking for the level to be tested at 32.40. And if that's broken, we're going to go down to 31 and maybe even lower. Platinum. So, very overbought, at a resistance level, couldn't close above resistance, although it got above it 4 times, 4 out of 5 days. But all the closes are at or below the resistance. And here we are crashing below yesterday's low, which is a test of the bottom of that zone. And today we really start well, at the top of the market kind of started, but you don't necessarily know it at the time. But now I'm a lot more convinced we're going to be going down to probably 1,000 at least. Yeah, and even lower. Next, high grade copper. Steady as she goes last couple of days after a bit of a break. Not overbought, not oversold. More elbow room to the downside. Looking for probably 4.48 and probably lower. And grain. I've been trying to justify long-term bullish stories on grains for many months, several months. It's not working. All these grains are slowly breaking support levels, failing to hold new highs if it ever did it in the first place, and turning around. So I've got to be neutral to bearish. I'm looking for 1036 to get broken. Next move down, 1008. Beans. We're already breaking the support short term in soybean oil. Looking for a new low to 44.70. Next down would be 43.09 and lower. Next, soybean meal is bouncing a little today. Not much. No upside breakout. A lot of resistance where it's gotten to. Today's high could be it already. I'll drag this to the right a little bit more. And I'm going to drag this to the right also. There's two different resistance areas for a little bit different reasons. Probably could combine them, but I'm not going to do that right now. So, neutral, bearish, looking for lows to be tested and probably broken. Corn, what can I say? Same story. Watch to see if support holds. If support doesn't hold, the next support layer and the last one is 416. If that's broken, it's a black hole. I don't know where it's going to stop. Next is wheat. The same story for wheat. I'm sorry, I can't justify any bottom happening here until I see something developing. Now, yes, a couple of days with the support, no big deal. You got to start closing above 555 in order to get some kind of a zip, pop, bang move up. Next, cattle. Again, if you don't want to watch cattle and hogs anymore, tell me. Up a little. We had a great sell signal on the top for a day or two. And now I still think it's topping out. I'm waiting for some kind of a reversal or support being broken. We did make a minor new high, not holding particularly well around unchanged right now. We could have a bearish engulfing. RSI is very neutral. Not much help here. Hogs. Well, we're trading between the rock and a hard spot, and we're testing the rock, I think. Maybe that's the hard spot. I don't know. Doesn't matter. Resistance. Maybe it'll stop here again. Closing above where we are, above the yellow zone, is going to be bullish for some sort of a move. I shouldn't have done that. It should have been like that. Yeah, actually, this should have been way over here. That looks a lot better. So I think it's about to stop rallying. We're not overbought. We'll see what it does with this resistance. No comment. Shell. Outside down day. That's a sell signal. Not super trustworthy, but fairly trustworthy. Better than a regular reversal, which would be a high, high, and a lower close, and that's about it. You start seeing lows under 65.35, then we're on our way down to close this gap, which needs to get to 63.40. And it could go lower than that. Apple. Outside down day yesterday and down today. That's what it's supposed to do. Trying to test some support. So we got some fairly decent support here, which is because of a gap closure, which worked real accurately, very accurately. That gap closure on May 7th, ended up with a very nice rally for a week. Yeah, what was it? From the gap closure of 93, we got up to 03, we got up to 203, And we got up to 13. Yeah, nice. 20 bucks. 10%. All right. Looking for lows to be tested, support to be tested. And if this closes below 93.30, could go all the way down to the previous lows here. And lastly, Tesla, well, we got one more after this. It's almost closed the gap that I've been talking to you about. Now, yesterday, we did not quite have a bearish engulfing. In fact, it closed a little higher, so it really kind of nothing. New high, slightly higher close, no lower lows. But now we're getting sucked back down to that gap, and it's closed some of it, and I think it's going to finish the job today, maybe even lower. Next, we've got the last stock. It is about, well, not quite. We're lower, well, we're back up on the day, 60 cents. But we have a higher high, and we're overbought, and we were almost below yesterday's low. That means if you make a new low and stay there below yesterday's low, you're going to have a red bearish engulfing ER sell signal, which I hope to end up being the top of the move. I like that. Watch out. Looks like Carvana could start to slip. Back to the E-mini. Looking fairly good. Hanging in there. But, as you know, I don't trust this little bounce. And that's about it right now. It's just a little bounce. Maybe it'll come up a little more. My guess is, oh, okay. You twist my arm. Somewhere between 58.85 up to 59.05. You guys have a great day and profitable trading to you. Have a great weekend.